Stock market today analysis for Aloha Thursday, April 6th, 2023. Hey, if you're not making some money in the stock market, then check out Eye of Success. Link in the description below this video. This website has some free stuff. It's got some paid stuff. But ultimately, what you'll be able to do is with an internet connection, bank account, and if you spend money sometimes, then you'll be able to start selling cash secured put options on stocks that you'd be happy to own. The great thing about this is you don't really have to spend a lot of time doing it. Once you learn how to do it, it's fairly low maintenance, right? It's actually pretty darn low maintenance. The free stuff would consist of this YouTube playlist, 5 videos there, these different downloads with the downloads in conjunction with the playlist. You'll have a good theoretical idea of how to do it. And right there, a link popped up at the 1 minute mark to 5 reasons why you should be doing this. When this video is done, go ahead and watch those 5 reasons why. Check out this website, get the free stuff, check out the paid version if you feel like doing that. Pay or ask me some questions about it, and we can go from there. Tomorrow is, maybe today was the last trading day of the week. How about that? I think today might have been the last trading day of the week. And tomorrow, though, we still have these have some different announcements coming out. Right now, I'm not sure if these, even though they're high impact expected, I'm not sure if that's having a big movement on the markets. I think the markets might be looking at some other things. We got a mixture of red and green on the heat map. Those big chunks, though, we see green. Those smaller chunks, we're seeing red. A little more advancing today versus declining. However, this is a really big tell right here. We've got a little bit over 73% of stocks hitting all-time new lows. That's not good. You know, we might have a handful of stocks hitting new highs, but in the big gamut of everything, we got 73% hitting new lows. 65.5% below the 50-day moving average, 56% below the 200-day moving average. Anything interesting in the headlines? Job data, job reports. Stocks haven't looked this unattractive since 2007. This is the kind of headline I like. I like buying things at a discount. You know, I like it when they hit their lows. Borrowing from key Fed lending facilities looks a bit in the latest this week. Cools a bit. Sorry about that. Recession's fear grow. Credit crunch is already underway. You know what? Sometimes don't wait for the headlines to tell you. If you got to wait for the headlines to tell you, you might be 5 steps behind the 8 ball, maybe even more. Let's actually look at, see how the markets shook out today. This is what I like to take a quick peek at for the general markets. To be honest with you, I look at the futures too, but I'm going to start leaving that out of here. Because if you're watching this to learn how to sell cash secured put options, you really, you know, futures is kind of out of there. But anyways, we got the dollar still continuing to go down. TLT, which is a representation of 20-year treasury bonds, that's a moving up, kind of bounced up over that 200-day moving average. Gold still in the sideways range above 200 if it keeps staying above 200, which you know, even if it doesn't, that's okay, because this is not actually gold. This is the gold futures contract. And oil is still starting to base at this around the $80 area. Bitcoin futures just kind of moving sideways in that 28,000. The volatility index going lower. You know, so even though there's this type of news, right? Apparently, the fear meter is low. Maybe there's a bit of a disconnect between the stock market and the real economy, huh? Maybe. Is it? If you tell me that's not a possibility, then you need to look around the world, and you need to see that in the 1980s there was a lot of stuff that people said were impossible. In 2023, it is full on happening. So be really careful with these things that you say are impossible, especially if it's about some stupid ass stock market stuff. because a lot of things can be possible in that. We got SPX, Dow Jones, NASDAQ, Russell 2000. All right, they're all showing green today. The Russell's still being a bit of a lagger. The NASDAQ's still looking strongest, but we're up here at this top part. And let's take a quick look at the 12 sectors that I like to look at. Slowing down here on the healthcare, financials trying to make a comeback. Industrial still going down. Telecommunications, kind of a little bit of an overlap, not too far away from the tech stuff over here. Just technology sector. It still kind of pulled back a little bit, but I don't think it's done with this. Just where it's at the moment. This picture that I'm seeing doesn't tell me that it's done with that little bullish trend. Energy kind of starting to move sideways. Consumer discretionary pulled back a little bit below that 200-day moving average. XLP for the staples still moving up, seemingly kind of tapering a little bit sideways here. And utilities has really, look at this, had a nice run up to the top of this range and broke out past it. Real estate just kind of doing the sideways thing. And retail is coming back towards the end of its range. Now, we're just starting to get a move up on this 200-day moving average, but you see it has been flat. Same thing here. We're starting to get a move up, but it has been flat. We got one that definitely has been moving up. Not super steep, but moving up. Flat, kind of downish. Flat. So don't be surprised if we look and we see a bit of sidewaysness in the market. And that is exactly, look at that, even to this point right there. Look at that. Boom. It's sideways. So that's what do we got going on here? You know, you can really see it's just been sideways in this range right here, from basically about 420 to about 380. And you know, the 420 people are laughing, and the people that claim that 380 just doesn't have enough stopping power, they might be laughing too. And everybody in the middle. And speaking of being in the middle, 400 is about in the middle, right? So it can go until it kind of decisively moves past this 420 or this 380. Then we're kind of just bouncing back and forth in there, and you know, we didn't get all the way up to 420, and here we didn't get all the way down to 380, right? So maybe the range is tightening up just a little bit, but we're really just continue to, in my opinion, in the big picture, just moving sideways. Let's quickly go through the top 10 holdings of the 4 indices of the stock market, which there's a huge overlap between the S&P 500 and the NASDAQ. But here's the S&P 500. We see that it's getting closer to this in the last 6 months, this high up here, but not quite there at the moment, right? Closed at 409, and it was kind of doing, where was it? Where is it doing that for a while? Oh, was it through here? Maybe. No, maybe it was back in here. I can't remember quite at the moment. I'm used to trying to look at that with that line chart. But anyways, I think this is, it was running, right in here. It just kind of wavering in this, around the 400 mark. And this is where it started. I think it was wavering around the 400, and then kind of in here, maybe it was around the 4.5. Was that? Maybe it was a little closer up here. But I'm really blabbing on about something I don't have to be blabbing on about. It's basically kind of going up, but it depends on the time that you're looking at it. Anyways, let's look at Apple. All right, Apple hit this all-time high. I'd say we're still in an uptrend. What time frame though? Because if you look at the year, right, that doesn't look like an uptrend, right? So if you're looking at a year's worth of data, it's not in a year's worth of uptrend. It's more like this. Just let's see, what is this about? Kind of roughly about maybe 4 months or so, something around there. Microsoft, kind of the same thing. Maybe it has started having this uptrend. Up here it started really testing that uptrend, but took back to it, and we got a new high for the last 6 months in Microsoft. Amazon, Amazon and Google. Okay, Google is starting to catch up with its older siblings there. Berkshire Hathaway. All right, we got some sort of different looks. So we got this Apple, Amazon type of, Microsoft type of look, and it looks like Google is going to start playing catch up. But before Google played catch up, it was doing this Amazon thing, Tesla thing, and then we got these Berkshire Hathaways where they were above the 200-day moving average and just moving sideways. See, Tesla kind of looking like that. Nvidia falls into that category of that big or stronger bear trend. JP Morgan Chase really was doing that sideways thing. It lost some ground here due to those whatever that stuff was that they got all the politicians to meet together to do all their illicit activities and pretend they're trying to save you. And then we'll move over into the Qs, and the Qs, looking like a tech stock, right? We already looked at Apple. We already looked at Microsoft. We already looked at Amazon. We already looked at Google. Oh boy, we already looked at Meta. We already looked at Tesla. We already looked at Google 4 times. 4 times in 2 indices. We looked at Nvidia. Here we go. Here's a new one. PayPal. All right, PayPal just kind of going sideways. It's doing the old Amazon thing. And Adobe. All right, Adobe's trying to make it on up. Move over to the Dow Jones. Dow Jones, right? It's got this look like the Berkshire Hathaway, the JP Morgan Chase type of look. Also, who looks like that? McDonald's was looking like that, but it broke out through this up towards the top here. So let's look at United Health Group. Had been down. Now it's making a good run up towards the top. Wow, really could have had a very profitable directional trade there, whether it was just stock or if you would have used options for that. Goldman Sachs kind of has a look of its own. Really fell apart around here during all that banking stuff that they claim is cleaned up, but they claimed that back in 2008. Here we are running into that same stuff again. So it's like your uncle that's always saying he's going to quit smoking, and maybe you don't see him smoking for a while, but sooner or later you're going to catch him smoking again. And then you'll have to listen to him for the next month swear that he's never touching another cigarette. That's what these clowns are like. Oh, there will be. Do you remember? If you didn't, find these clips where Janet Yellen says there'll never be another financial crisis in our lifetime. But here we have another one. Yeah, I know, Uncle Tom. You're never going to touch another pack of cigarettes. Dad, I give him 6 months until we catch him smoking again. Right? These guys are numbskulls. I don't know why anyone takes them serious. I don't take them serious. I take them as serious liars and connivers, but that's about it. All right, and I do take them serious that they could definitely mess up my life if they hear me saying that and they get some vindictive, hair up there behind. And we got Salesforce pulling back just a little bit, but that's not really enough pullback in my mind to feel like it's compromising that upward trend. We looked at McDonald's, so we looked at Honeywell. Honeywell had been in this downward trend, but it's trying to make this comeback. It's doing the sideways thing here. And Visa, okay, Visa is doing our little Berkshire Hathaway look, but it's not as volatile, but it's more like a smooth volatile when it's doing that. Amgen, all right, it's making that run for the border, trying to get across the other side of that 200-day moving average. It seems to be doing it. We'll see how that works out. And then here we got Boeing doing that same thing above the 200-day moving average, going sideways. I guess sooner or later it's going to break out one way or the other. And maybe everything will just go back up to the top. But You know, the market can really go up, but that doesn't mean that everything's great. Remember, we were in the middle of this health pandemic and all that stuff, and you know the world was ending, but the stock market was, you know, skyrocketing up. So you got to keep in mind that the stock market kind of has a life of its own. You know, it's not the 1960s anymore. And even though you might still be listening to the music of the 1960s, and you might be reminiscent about the good old days, and you know, wishing that you were still either the star cheerleader or the star football player, but it's time to splash some cold water in your face and wake up and just smell 2023 and accept it for what it is. All right, so over here on the Russell 2000, it's lagging behind, right? It's showing you it's stuck in this area right here. We shouldn't be surprised. We've seen it stuck in there before. And if it starts ripping to the top, we shouldn't be surprised either. But it's going to need AMC to rip to the top a little bit too. AMC is just it's just a wonderful below 200-day moving average, and on the top side of the 200, it's a disgrace. Shockwave starting to move its way up. We see it's just bottomed out right in there. Biohaven, what's Biohaven doing? Well, it hasn't been doing enough to even have a 200-day moving average yet. It hasn't even been moving enough to have a 50-day moving average on the volume. So, you know, whoever's in charge of putting this in, they're really putting these stocks that are wet behind the ears. And Intelia, it's got that same, you know, kind of Amazon, Tesla look. Google already booped, it popped up here, booped, it popped here, and then boom, it's coming up through here. So maybe we'll see some other doing that. Crocs, it's doing this above the 200-day moving average, going sideways, still doing that. And Chart Industries, below the 200-day moving average. This one doesn't have that same Amazon look. I guess it did try to make it right here, but it didn't really have that good follow through. And I don't know what's up with Chart Industries. And we got two more to go through. This one's got its own look too, right? It's very, very volatile. This is what kind of stock is this? Therapeutics. This one, I wonder if this would be a good one to day trade. It looks like it would be a good one to day trade. I haven't done much day trading lately, and looks like a lot of volatility right in here. So you know what your good buddy Brent is doing? You can probably guess. I'm selling cash secured put options. I'm selling covered calls, and I got some naked calls. And if the naked calls start running against me, I'll turn them into covered calls. But that's all I got going on right now. I'm buying more stock on certain equities, and some of them I'm buying through selling cash secured put options. Some of them I'm just buying straight out. Some of them I'm doing a combination of both, and some of them I'm acquiring more shares because I'm selling that naked call. Let's pretend I was doing it on this. Let's say I sell it at the 420, not because I'm a 420 fan, but just because it's right there. And let's say it starts running up to 420. Okay, then I buy how many ever shares I need to cover that position. Now I'm only doing this on stocks I want to own shares of, because if it pulls back, if it doesn't go up to 420 like it did here, hey, I want to own these shares anyways, so I'm good. So I'm doing a lot of stocks I'm doing the wheel strategy on. Some stocks I'm doing the wheel strategy really, really slow because I want to own them for a long time. Some of them spinning the wheel a little faster. You want to know about that? Check this out. You guys have a fantastic day. I want to leave you with one more thing. If anyone tells you that paper trading is a waste of time, put that in perspective. Would you let your 12-year-old or how about your 15 or 16-year-old child start driving without doing driver's training, without practicing to drive? Would you just let them get their license and say, here you go, get in the car and figure it out? Would you let them do that their very first time driving? How about for your same child, if they wanted to start boxing, would you let them go have their first competitive boxing match without going to a gym and hitting a bag and having a coach and sparring and training and practicing without doing a real competitive match? Is that how you would do it? You would just send them in there. You'd say, hey, Junior, just get in there and slug it out, buddy. You don't need to practice. Practicing is a waste of time. Is that what you would say? I don't think you would. So if you don't think you would do that, if you want to do that to yourself or you want to do that to your family, come on, be realistic then. Sometimes we have to examine our beliefs. We have to examine our opinions. Because I can have an opinion that from the floor to the ceiling it's 14 feet. And then you go over there with a tape measure and you measure it and you find out it's only 12. You know what that means? There's a difference between opinions and facts. And so check your opinions. Check your opinions. Don't put yourself in a bad financial situation because you got some weird ego thing that you're only letting it affect you here in the stock market. And when it comes to getting punched in the face, you don't let it affect you there, right? If this is a true theory that paper trading is a waste of time, then it would be a true theory in everything. How about flying an airplane? Would you practice that? Would you get in a simulator? Would you train how to fly an airplane? Or is that a waste of time? Should you just, when you decide you want to fly a plane, should you just hop in a plane the first time and take off? And you're like, hey, I'm either going to swim or sink. I'm either going to fly or crash. Come on. I don't believe any of these examples. If you tell me, yeah, that's exactly what I do, I think you're a liar. A liar. I think you're lying just to try to debate, right? So be realistic with yourself. Paper trade. It's totally okay. And for the dorks that say it's not okay, just realize they're hypocrites. They would not do these other things like the way they're claiming they would do the stock market. And if it was a valid philosophy, if it was a valid premise, then it would work in all areas of life, right? The valid premise is to practice and to train before you do risky behavior. And make no mistake, trading in the stock market involves risk. So go ahead and practice. Anyone that's giving you a hassle about it, remove them from your circle. And, don't blow that out of context for me. Well, you said remove him from my circle and it's my dad. Be an adult, right? If you're not an adult, even if you're of legal age, but you're not emotionally, spiritually, and intellectually an adult, my content is for adults. If you're not an adult, you should probably go watch something for kids. Okay? I hope it's not you. I hope this is not you. I hope you're getting the point though. This is serious stuff. Just like getting punched in the face is serious. Just like flying an airplane is serious. Just like flying a helicopter is serious. Just like being in the military is serious. They don't let you go in the military without going to boot camp. When I was in the military, we did a lot of training. Why did we do a lot of training? Why did they say it was a waste of time? Right? Because there's a purpose for it. Whenever you're going to have risky things involved, it's good to practice. You guys have a fantastic night, and I hope you can shake off any sort of doubt on the benefits of paper trading. Aloha.